NIO Stock's long-term performance depends on whether it can truly become the Tesla of China, which in turn heavily depends on whether the Chinese state wants NIO to become a national electric vehicle champion. Now, before we get started, please don't forget to subscribe. Folks, today let's talk about the long-term potential of NIO stock and the short-term volatility that we might have to endure if we want to ride the rocket ship that is the NIO stock. Let's face it, those of us who have invested in this stock recently have profited handsomely from a run-up in the stock price over the past few weeks. From the beginning of this year, when the stock was below $4, it has gone all the way up to almost $30. It went from a fringe Chinese EV maker to one of the most talked about stocks this year. The big question is, how will the stock behave from here onwards, especially over the long term? To answer that question, we will need to understand the company's plans for the future and the overall EV market in China. Since NIO vehicles are currently only available in China and it shall remain that way for the short term, understanding the Chinese EV market is key. First, let's analyze NIO's market cap for a second here. It can give us some clues as to where the company's stock might be headed in the long term. As you can see, the market capitalization was $6.4 billion when it went public in September 2018, and it hovered around $7 to $8 billion for the next 6 months. From early 2019 until May of 2020, the company's stock and of course the market cap absolutely cratered. It was as if the company would not survive. It got no love from anybody. Investors stayed away from the company in droves, and then it just went ballistic. From the middle of May 2020 onwards, the stock could do no wrong. It went up by a factor of 9 in only 5 months. The market cap went from $3.5 billion to almost $30 billion. Other than Tesla, few other stocks in recent memory have done so well in such a short period of time. The billion-dollar question is, can NIO's market cap break the $200 billion figure in say 5 to 10 years? 10 years being the key. Let us analyze the different factors that will determine whether a market cap of $200 billion is a realistic financial goal for this company. According to William Li, the founder and CEO of NIO, the company will triple its manufacturing capacity by the end of 2021. That is a very ambitious goal. It also means two things. NIO expects massive growth in sales and the company won't have any problems delivering the vehicles. For a lot of new EV manufacturers, getting production up and running has been an Achilles heel. The most famous being Tesla's production problems with the Model 3. It took them many months to ramp up the production of their cars. NIO seems to have learned from Tesla's hiccups and is planning accordingly. It is investing heavily in its production capability along with the help of its production partners. Beyond 2021, the company expects to increase its manufacturing capacity even further. It means that the company is very serious about its long-term business prospects. What this all means is that NIO's management is planning for exponential growth in the coming years. Only one other auto manufacturer has experienced this type of growth, and that is Tesla, and we all know what happened to that stock. The Chinese EV market is growing faster than analysts had previously predicted, and the EV market could be at an inflection point. The Chinese authorities want EVs to comprise 25% of total vehicles sold in China by 2025. Given the state's heavy influence in the Chinese economy, a lot of analysts agree that the numbers are realistic. Now, of course, even though the government wants the EV market to take off, it will need a local private company to lead the charge, along with a few other smaller companies, similar to how Alibaba leads the e-commerce industry in China, again along with several of its smaller competitors. There will be a couple of local EV makers that will dominate the huge local Chinese market, and NIO is definitely one of the front runners. The Chinese government wants a global champion in the EV sector, and NIO seems to be the winning bet for now. To reach our predicted market capitalization of $200 billion would be an uphill battle for NIO, but it is not an impossible goal, surely a great bet for long-term investors. We will be doing a more thorough analysis of the overall Chinese EV market in an upcoming video. We will talk about who are the different players and where NIO stands in that mix. Please let us know your thoughts on that. Folks, our goal is to create a great community of like-minded investors with the sole purpose of finding and investing in great stocks. We would greatly appreciate if you could click the subscribe button and give this video a thumbs up. See you soon in the next video of Stock Market Analysis. Please don't forget to leave a comment about this video. Tell us what you liked,